Hello traders, welcome back to the channel. This is your boy Janoy and I'm here with one more session of Market Outlook. Guys, if you're new to the channel, Market Outlook is our weekly session that comes out where we actually take some time to analyze the overall market, meaning the ES, the Nasdaq, and the Dow Jones Industrial Average, to see where we're looking for the market to go into the upcoming week based on technical analysis as well as our experience to make the projection and manage our trade, as well as put our game plan together so that we know how to look and play the market here into the new week. All right, so if you're new, subscribe, like, and comment down below. Also share the page with someone that may need to see some of this information. At the end, guys, I'm going to be sharing and talking about 3 stocks that we've been playing, one that we're currently in, one that we were in, and stuff like that. So stay tuned till the end and I hope you find some value. All right, guys, let's jump into it. So man, I must say that the market has started off pretty good. Just like last year, the market started off really good. Everything is intact. The market looks healthy. We got stimulus, we got everything, we got new president, all of that stuff that I think has cleared the uncertainty from the market. And once the market does not, once the market has clarity, then these are all good signs for the market to continue moving higher. All right, so right here on the screen we have the S&P 500 futures. And guys, when we look at the market, last week we talked that hey, the market is trending. So when we're in a trending market, this is where we actually use the moving averages, in particular the EMA, which is your exponential moving average, as support. As long as the market doesn't break the EMAs, that means that we will continue trending higher. Every time the market comes to the EMAs hold and bounce, that is going to be the support zone, and we will continue moving higher until we close below the exponential moving average. Nothing is going to change. The trend is going to be intact and we're going to continue moving higher. So if we look at it, man, we see the market is very nicely uptrending. Last week, yes, we pulled down and pushed down below the EMAs, and I was very concerned at this point because I'm like, whoa, we just broke the 10 and the 20 EMAs. But I said, okay, let's give it one more day. And guys, what happened next day? We bounced out of that support and the market continued to push higher. So this helps us to clearly identify the uptrending support level and the uptrending resistance level. All right, so if we look at the chart, based on what the chart is saying, what are we looking at right now? We're pretty much right into the resistance and new all-time high. Based on the chart, where will we be looking to take a new position, assuming that you're trading futures, whatever. Me personally, I'm looking for this to come back down into the support again, and at that level, that will be 100% a low risk play. The momentum is strong, so the first projection is that okay, we pull back here into the support, and then we bounce here and we continue moving higher into this solid uptrend that we're seeing. All right, if that doesn't happen, guys, we're just looking for the market to pop out of this uptrend here and just pop up and continue moving higher. That is very possible, but based on the trend, we're looking for this thing to pull back here, and that will be nice, safe, healthy, and then from there we take it a little bit higher. Okay, so that's what I'm looking at for the ES. Quick view on the hourly chart of the ES, guys, we see the trend is 100% clear. Nice uptrend. All right, however, up here we started flatten out, boom, we bounce off the 50 on the hourly, 50 EMA on the hourly, and now we pretty much make a new high. So it's very possible that we can continue pushing back higher, or we will come down a little bit, retrace, and then the market continues to go higher. Okay, that's what we're looking at. Everything stay intact, we will continue on that trend. Let's look at the Dow Jones Industrial Average on the daily, see what we're saying or seeing. We talked about this, ascending triangular pattern. This is this right here. we said we were looking to get a breakout potentially out of this pattern, and the market will continue to go higher, because the way an ascending triangular pattern works is just like this. The market will run up and then it run into a wedge and then it pops out and continue higher. Okay, market will run up, run into a wedge. Whenever this consolidation is over, the market will break out and continue higher. How much higher? Well, this is where we start to look at what's the length of the pole into that actual consolidation, and that will give us a projection up to the upside. So for now, we are still looking for this to move higher. It didn't close as nice, it didn't close as sexy as the ES, but we still have the potential to go higher. When we look at it on the hourly basis, all right, this is where it popped out of that ascending triangular pattern. You can see pull back, we made a all-time high, and then for some reason the market pulled out. I think Munchin came out with an article trying to say something about not confirming something. I'm not 100% clear, but that's why the market had pulled back a little bit on Friday. However, we see that the market started to recover. Okay, so as long as the Dow can push back up into the 31,146 level, there is a very high probability that we can break out. If we don't break out, then we're just looking to come back down, and this actually becomes a full-fledged channel until we're able to break out of that area and continue higher. Unless something just 100 pop up out of the blues that we weren't paying attention to, I do see this market running higher. I don't see anything that's just gonna derail the market at this time. Everything is looking good. All right, so we're going to trade it as it is, trade it based on what we're seeing, take the low risk entries, and then take our profit when we get to the profit targets. Okay, when we look at tech, guys, we talk about this pretty much when the market was actually in a horizontal consolidation here. The market had actually started to change the pattern, whether we realize it or not, because when we pull down here, we started to get tighter into this wedge, and boom, now we're all the way up there, completely broken out, made a new high. So this switched from a actual sideways consolidation and move into what we have now, which is a ascending triangular pattern. This is extremely bullish, guys, because the market keep on making new highs and it keep on making higher lows. All right, that is very important to know where the market is going. And in addition to that, we can see clearly that the Nasdaq is trending, which is healthy. What does that mean? It means that every time the market pulls back into the EMAs, they hold as support, and the market continues to bounce and move higher. We have broken out, closed very strong, so I'm looking for this momentum to continue higher. If we get any pullback, I'm not looking for it to break the EMAs. If the EMAs somehow get broken and we close below that, then this is the first indicator that we need to start paying extremely close attention to the market. But if none of that takes place, we are still looking healthy, and the market will continue to move higher in the trend that is currently pushing right now. All right, so we're gonna do a quick review of some of the stocks we already talked about in the last market outlook and see how they're doing and what we should be doing in terms of these positions. I already talked that this year I'm going to be position trading and not so much actively trading. It means I'm going to move around less, but I'm going to take bigger positions and I'm going to manage them in anticipation of pulling off some bigger profits rather than taking smaller trade and actively trading like I used to. Okay, so the first one that I brought to you guys in the last market outlook session of last week was CRM. Guys, we talked about how last time this thing popped up, I think roughly 70 points on earnings, major gap, and this was back in August when they reported earnings. All right, from there the market just kept on pulling back down, and this is very common whenever the market leaves a big gap, whether it gaps up or it gaps down. It will usually fill the gap before the market makes the next move, right? Typically, it's not always immediate, but somewhere, somehow, the gap usually get filled. And we can see for the last 3 months, this thing has just been drifting and drifting and drifting down, and now the gap is filled. So like I say, we have a small play small position here, and we're looking to see if this thing, the gap down at this level, the 216 level, is now filled, because we came down here. Now we're dancing around, and I'm seeing a potential pattern down here which looks like a W pattern that can actually take us back into potentially level 2, which is going to be the 253 area. And then if we don't get to that level, then we're coming up to level 1, which is the $240 level, and that's going to be the first level of resistance, given that we left a gap here when we were coming down. All right, but big picture, like I said before, this market run up very nicely, and now it started to pull back. Typically, with the way the market move, you will have major run-ups or a trend up, and then we have a pullback, and then the market will continue to move higher again. So that's what I'm projecting to happen here with CRM. If I'm wrong, where is my I'm wrong level? The I'm wrong level is going to be 216. So if we break down below 216, yes, the 200 is roughly at 210, but that's 6 points. If we break this support level, I'm no longer holding this trade, because at that time, I do feel like I want to cut my losses and move on until this show me some other sign. I may just move to another stock. But when I look at it on Friday was the first day we actually closed back above the 10 EMA. So now that we have taken out the 10 EMA, we're projecting that we can come and take the 20. If we take the 20, then we can get back to the 50. And when we get to the 50, if the 50 acts as resistance, that can cause the stock to sell off again. But if we break back above the 50 now, that is a bullish sign that we're looking to go back up to 243. All right, so that's the full summary on that one. We didn't talk about this one. So my new play that I want to bring you guys in on is basically LI. We know Tesla is doing good. We also know that NIO is doing very well. So we're anticipating that LI can actually get a momentum push from that. We see the stock had a very nice pullback retracement, and from the bottom we started to move up. However, I wasn't comfortable taking a position until we were able to break out of this resistance level. I think 2 days ago we actually broke out. I took an entry inside this level, and now the stock gapped up the next day, but then it just started selling off extremely fast. So I didn't close the position out, still at break even. When I look at this, I just see that the stock pulls back down into the actual support on the hourly chart. All right, so and it had started to bounce a little bit. So do we continue to move up in this uptrend and try to get into at least the 50% retracement level? What am I talking about? So the stock fell from here down to here, right? Stock fell from the top down to this level. Let me clean this up. So the 50% level, actually that's where we came to. We came into the 50% level, so that's why we sold off just like that, because some guys bought down here, and then the stock actually recovered 50%. They closed it out, and now we're pulled down. So we have to see, do we hold at this level and now try to come back into the 61% level, which is roughly $40. Bank of America also upgraded this stock to a buy with a price target of $42. Okay, so 42, that's where I think it can actually get to 40, and I'm waiting and holding to see, you know, if we get back to the $40 level. Where would I close this trade out and take a small loss? Well, if it actually started to break down below, you know, 33 completely, mainly if it breaks 32, I would no longer be interested in this play, because now what actually happened is that it run up, small up move, lower high, and now it breaks the uptrend that we were in shortly, and that can be a move back down this way. Okay, so I just want to be mindful of that and share that with you guys. So that's one of my plays going into this week that you guys can follow, look at it, see how it plays out, and just monitor and learn something from the charts. All right, so guys, if you found some value to inside this video, you know, please like, subscribe to the channel, turn on your notification bell, so when I come live with a new video, you get totally updated immediately. And you know, put your comments down below. I'd love to chat down there with you. All right, see you in the next video.